High-risk investment. Trading on margin carries a high level of risk, and may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading, and seek advice from an independent financial advisor if you have any doubts. Market opinions. Any opinions, news, research, analyses, prices, or other information contained on this video is provided as general market commentary, and does not constitute investment advice. Master the Markets will not accept liability for any loss or damage, including without limitation to, any loss of profit, which may arise directly or indirectly from use of or reliance on such information.
Tira, I think you're muted.
Yeah,
you
I just realized I was just muted. Yeah, that's good.
I was lip reading everything you were saying there.
Right, great. Good to come on day 4 of Live Trading Week, traders. It's been a great ride so far. Great feedback, great trades. Yesterday was amazing when Gavin was taking one of those trades on volume on the 3-minute chart, and we all just watched it in silence as it did what Gavin was saying. If you haven't watched it, you definitely got to go and watch it on our Trade Guider channel as well as Master the Markets channel as well. It's all being recorded on live streamed on YouTube. The other thing also I do want to mention to you before we go on to the charts today, we did an epic interview yesterday with Tom Basso. And it's all here on our Master the Markets channel, youtube.com/Master the Markets. So you can go and watch that. Already raked in 289 views, not even 24 hours yet. Some of you have been there, would have seen that it was really incredible with a market visit. The other thing also, some of you have been asking on us on the Master the Markets Trading View channel. If you want to follow us, that's Master the Markets 2010. Gavin, what's your channel name again? Is it just Trade Guider?
Yeah, Trade Guider, yep. So just youtube.com/Trade Guider and click on the live stream or the video stream. Either one will have stuff on there.
There you go. And then on TradingView, what's your handle over there so that people
can follow?
So
we've got Trade Guider VSA, but the one that I'm actually posting on, actually, I'll tell you in a minute when I actually open the chart up. So
yeah, no problems.
I think where it is. Yeah.
So there you go. That's the Trade Guider channel there, youtube.com/Trade Guider. You can see we are live now on day 4, and all the other ones from before, you can also see that. We're also doing, I know you're seeing all these Tenerife pictures, beautiful pictures. That's going to be on November. We've been talking about it. You can watch the videos from before 15-16 on November for the Elite Traders Mastermind annual event in the Ritz-Carlton Tenerife. I'll talk more about that later. Right, now let's get on to the charts for today. So what's happening? We've been learning so much so far on the stretch principle. Gavin, just before I start, I mean, a few things that you want to say that you want to show the people today, and then maybe tell them what's coming up.
I'll just go quickly onto in video. It's quite interesting because I did a...
Yeah, go for it.
I had a Trading View video that, and I'll actually, let me just replace the current share one sec. Okay, everyone should be able to see my screen now. And by the way, welcome to you for our day 4. I can't believe it's nearly a week gone by since we've been doing this. And
yeah.
Now, my handle, for those of you that want to follow me on Trading View, is up here. It's just Gavin H10 to, I don't know why they got this number from, but it's 10277. All right, so it's Gavin H 10277. Okay, and this, as we can see here, is obviously the NVIDIA chart, which we can see. Now, I did a video on this a few weeks ago now, about a week and a half. Well, it was when the news came out and there was a big 10% drop. It went down to nearly, you can see, to 90 here. And we had, what was very interesting at the time, I said, well, this looks like it's being accumulated. And I talked about accumulation and how accumulation, because everyone who bought NVIDIA, there was quite a few people on TradingView saying they bought NVIDIA at 135, 140. I'm thinking, well, that's not what I'm seeing. It looks like there's downward pressure coming in the market, especially on the weekly chart. But let's play this through, as we can see here. Okay. And what we notice here is we've got the SMI indicator right underneath the PB here, which is potential professional buying. The system marks the top of the bar and then will send an alert out to me in this case. But if you've got our system, it'll send an email alert to you. But you know, because it's a daily chart, you don't really need to worry too much about that. We'll look at, we've just had, by the way, just so you'll know, the European Central Bank just cut their rates again. So that is going to move the British pound and that's going to move the euro. So maybe we'll have a look at those later on. Following this through, I did mention what we want to try to see here is a push up to around the 120. And that's what I said a week and a half ago. And we can see where we're at here. Okay, back down. And we come back down for, again, what is this level where they bought. And on the 4-hour chart, I had a clear test over here. And then we can see the SMI indicator, and then it's jumped back up to 116.90, which would have been yesterday here. So, all right, got to wait for the market to open there. But a really interesting chart to follow. And then here, this is gold. This has just come in. Okay, 5-minute chart of gold. We've got a load of accumulation on the 5-minute chart. So they sold it off. Obviously, this will play into the fact that the banks were speaking, the European Central Bank. PB, we can see the buying. There's the change in behaviour. There's the SMI indicator. There's the test. In case you missed this, there's the test. And that's why we're seeing now a spring forming. And I look at gold ready to start attacking the 2600 area. And we pretty much nailed the British pound again yesterday. That was really obvious on that 3-minute chart. So I will look at some smaller timeframes when we get to the futures markets. But for the moment, I'm going to hand you back over to Tiru, and we'll talk a little bit about stops as well today, because I know that's something people have asked me. And Tiru, a couple of people were asking me when we're sending out the email for the event in the Canary Islands. So if you want that email, I believe, Tiru, you've already sent it, haven't you, to your database, but we just got to send it to ours, I think.
Yeah, we've already sent it to ours. Yes, you're right. Yeah.
Okay, well, we'll send ours out later on. That's fine.
Yeah.
Okay.
So,
I'll give you back the screen. There you go.
all right, no problems. Let me just do that. Share my screen. How do I do that? More, share. There we go. Zoom keeps changing their stuff, how they lay it out. Anyway, there we go. So here is the NVIDIA stock. I know some of you were asking about that, S&P as well. So let's analyze that both. But before I do that, I'm just going to quickly analyze through any setups that's coming. I just took a look on the Forex Factory as well. We got the big, like what Gavin was saying on the ECB conference, is happening at 1:45. So we'll wait for that as it comes across. They're saying that, just like what Gavin said, is more hawkish than expected. So highly probably, let's see what happens on that. The interest rates will be cut down or not. So let's see. So in terms of the technical aspect of things, so usually before big news comes out, we usually will wait because we don't get caught out in these spikes. There are some other traders who will position themselves even before the news. But if you do that, do always remember that your stop's got to be quite wide to allow for the volatility. Okay. Right. So in terms of this, in terms from a stretch perspective, it hasn't taken out either the upper stretch line or the lower stretch line. And the reason for that is very obvious, right? Because the news is coming out, it's consolidating, and then it's just waiting to which area to take. But actually, the direction is actually contained in the price itself, if you're able to read it properly. What we can see over here from a direction basis, I know some of you are asking that you're not sure, like what should I do with the chart first? Some of you are asking when I start my trading day, what should I do as a step one? We would always say from our side is, determine market structure first. Okay, this is what even Smart Center Pro does as well from Gavin's Trade Guider team, where it tells you across all the time frames what the trend is. So that's the first thing we always do. So we will take the trend and the phase of each of the time frames. Okay, so these are the things that we're going to go so much more detail also in our research updates in the Elite Traders Mastermind Annual Summit in Tenerife. Okay, one of the 5 research updates we're going to be talking to you about, the 5 ones. So the first thing really I would say is when you're looking at a chart would be to that write down all the trend and the phase for each of the time frames. Okay, the instrument that gives you the best alignment, which is what we saw on cable yesterday, is what then you will be taking a look at in terms of a potential trade. So let's take a look over here. So just 1 minute, I'm just taking a look at time as well for the ECB starts. You won't react that fast until the news, they start talking about it, but we'll see how that goes. So on the daily time frame, so you can see it's a downtrend at the moment, right? The trend. And then the phase over here is a top to bottom, is an alignment with the trend. So that's what we call a phase 1. Okay. Remember that in a trend, in terms of a downtrend, right? One is going against the trend and the other one is in alignment with the trend. Okay, phase 1. So it's the phase 2. Okay, in an uptrend that will change, this will become your phase 1. The bottom to top will become the phase 1. Top to bottom is a phase 1 in the downtrend. Okay, so good. So that's the first thing we would do. Now the other thing is then we move down to lower time frames and we see, right? So then after that we got the 4 hour over here. So what is the 4 hours saying over here? That's also a downtrend phase 1. We saw that yesterday, didn't we? So these are the first things what we would do. Okay, then on the 1 hour, what is it then telling us? Then we go on to the 1 hour. Then we can also see that at the moment, this has taken out that high there, and it's showing a little bit of an uptrend push. Okay, and at the moment, right, it took out that high, and then it's still maintaining that low. Therefore, it's a bottom to top move according to our market structure. Then uptrend phase 1. So this is why it's very important to know your market structure. If you do not know, then it gets a bit confusing. This is why we quantify every top and bottom here, right? Over here with the confirmation bars, over here for a top and a bottom. Okay, on TradingView, the bottom is a blue arrow with a blue dot and the orange arrow with an orange dot for the top. Okay, so those are in the 3 time frames there. Let me go down one more time frame, 15 minute. And let me see. So after that, then we will then start to align it together. Okay, this is the first thing that we would do, right? So then on the 15 minute, it's still showing an uptrend. The bottom hasn't confirmed. So on the 15 minute, this is an uptrend phase 2 at the moment. Yeah, a question of whether this bottom is going to confirm at the end of this 15-minute bar is what we will be taking a look. It hasn't confirmed yet. You see, the arrow hasn't come yet. So that's what we got then so far. Now the question is, so let's now go back. Let's put this all together, right? So you can do this across any instrument, S&P, NASDAQ, and all that. So yesterday we brushed through a little bit of this, isn't it? About market structure and everything. Those of you who missed it, please do watch the previous videos. So this is what we got. So the daily, 4 hour, 1 hour, and the 15 minute, right? So the daily and 4 hour correlating, but this and this is not correlating, right? The lower time frames. So the question is then, is the lower time frame going to lead the higher time frame and turn the downtrend phase 1 at least even into a phase 2? This is the question. Or is this just noise where it is just going to follow the higher time frame and take out those lows? Okay, now how do we answer that? The way to answer that is in terms from a range perspective, from the stretch principle, I'll mark out the levels first it needs to take out. You see, now the price is gaining momentum here. The first place I would take a look in terms of stretch principle is for this range to be taken out first. This is the highest high of today, right? So it's just taken out there right now, as you can see, right? And that's a first potential trade entry point. The second place that you can place your trailing stop loss quite safely is for the lowest point of the day. Now, if you were to match up with everything that we have taught you so far, that you can see that the stretch is the nearest extreme to the open. So we are saying that this highly probably, remember this was the open price, highly probably this low is going to become the lowest point, right, of today, for today's bar that is forming over here, right? So let me flip that over here, over there. So what I'm saying is, as this tiny bar is forming to make its range, we are saying that the lower part here is what is going to become the stretch for today, and then the bigger range from open is going to form to the upside. So we are looking for clues. We are not saying that's going to be the case, right? We're going to be trading based on probabilities, okay? And I'm going to take a look at volume very shortly as well, once I put all this market structure together, right? So that's the first thing. So your thing is, like what Gavin always says, like a detective, right? Is to see whether this lowest point today is going to hold and become the stretch to form the bigger range to the upside. Or the other question is this going to become the high for today, right? Is that going to become the high for today? And then, so that's going to become the stretch, and then this is going to become the BRO. So that's the question. So how do we put, now trading is matter of probabilities, right? We can't say anything for a guaranteed or whatsoever. So we're just going to put the probabilities together. In terms of the time frames, is 2 against 2, isn't it, right? So let's just put the probabilities. And remember, sometimes when it's not that clear, we don't need to trade that instrument. That'd be some other instrument that would be much more easier to make money on. All right. So let's take a look at this. So in terms of this, we can still see some bullish strength on there. Let me just quickly flip onto the 15-minute. And then I just got to put the numbers together. And then you'll be able to see it very clearly, which is what we've been doing over the last few days. You can see that's already confirmed the 15-minute with the range being taken out. That is 2 factors coming together. So this is a good one here. So this is where we can start to take the look a position. Okay. Now, the other thing, what I'm going to quickly do is, as of now, that is about 19, right? So I'm just going to put that from the open. Remember what we also have said. We only look at the open here because we're looking in terms of the range concept. Yeah. Usually we'll look at the close, just like what Gavin had mentioned before. Okay. For different objectives, you look at different things. This was also mentioned by Tom Basso as well yesterday in the interview, right? Based on your objective, you look at different perspectives. Okay, so this one is 10 to the downside, right? I'm just measuring. You see, I'm taking from the open price here, the blue line, right, is taken from the it will match up with the daily as well, right? The open price on the old Chelsea bar is what we are taking a look at, right? So what we are then doing over here is from the open to the lowest point, that is about 11, okay, is what we are taking a look at as of now. Okay, so that I will put that in red. Let me just do that very quickly. Right, great. So we got 11 to the downside from the open and 19 to the upside so far. Okay, most important thing is whatever you do, you must know what you're doing. Okay, so that even when you take a win or a loss, you know why logically you have made that win and loss. Okay, right. So right. So then what we then are looking at next is, let's see. So then the next thing what we are then looking at is the ATR range, what I've always mentioned to you guys. So yesterday's ATR range was 76, right? This is what in the interview, Tom Basso looks at ATR ranges as well, volatility-based price triggers. 80% of 76, right? If somebody is much more faster than me on maths, you can do that. So let's take a look. 0.8 times 76. So 60.8 is what we got. So 60, let's just put it as 60 for now for range capture. Remember, this strategy is just based on range capture only, okay? You can design other strategies. We looked at one yesterday where two of us, me and Gavin, were placing it after the range got formed. It was based on OE principles, right? So watch yesterday's one where we talked about that too. Great. So how does this all add up? So you see, if this was the stretch for today, so the 11 is going to stay as the stretch, right? The 11 pips, and the 19 pips is going to go further up by taking out first this range, taking out the upper stretch line, and then going on further, then you and I know that from 11, it's got to form 49. That means 30 more from this blue line, right? So then it will become 49 plus 11, then it will make it 60, okay? So that's what we are looking for if it does to the upside, okay? That's what we are seeing. But remember, this is only towards today's bar formation, nothing to do in terms of the trend. Why we put the trend in the beginning? Just to give us an understanding of the correlations, okay? Then we see with the lower time frame matches. I'll be very honest with you, this is not one of my best setups because the higher time frames are not correlating. If I were to take it with the lower time frames correlating in the belief that just for range capture only today, we usually would reduce our risk on the setup. Okay, that's what we would do because we don't want to get caught up with false breakouts, which is what's happening right now, and also with chops as well. Okay, so wait on this and see how that carries on to be. Let me just see if we can get a quick obvious trade that pops up to our eyes. But another thing that you can also see, if it takes out the low, then in that case, if it takes out the low, then the upper will become the stretch for today. 19 will become the stretch. Then we are taking a look at 41 to the downside to make up the 60 number. That means 30 from the downside. So now when we correlate all of that together, I'm just going to go on the trading view. You can put the VSA light on top of this, and that's where it becomes quite very powerful, and then the volume as well to give us few more clues. So you see, when I go on to the 1 hour over here, let me just put in, right, so you can see that that's a gray dot over here, but before that, that was a green. I'm just going to check on the 15-minute as well. And we can see that there has been some good volume coming on from the previous bars over here, but that's just before the news, and then the green dot over here. So some kind of a buying strength, not very strong, but something that we can definitely look out for. Gavin, how would you interpret that? Would that be more similar what I've seen on the volume side of things to back up that price action?
Yeah, it's very interesting. When we came on air, you know, about what was it? It would have been now nearly half an hour ago. I talked about gold at 2560. If you heard that, yeah, just gone straight through it. It's all there as well. It's all confirmed, and I'm going to show you, and I'll show everybody on the smaller time frame that I was using to project out there. Now, it's interesting, the press conference that's underway right now. I'm just looking at the ECB website. That's the European Central Bank. And what they've basically said in their press release here, which was already leaked an hour before, by the way, because I knew when I came on air what they were going to do. So that someone must delete it. But I got a text message. But anyway, it says, the government or the governing council today decided to lower the deposit facility rate, the base rate at which it steers the monetary policy stance, by 25 percentage base points. Now, what that basically means is, obviously, when you look at something like the pound and the euro, it's certainly had an effect on the gold price. So yeah, now looking at what you were looking at earlier there, I mean, I think we can certainly start to look at multiple timeframes today, going from the bigger picture and condensing it down to the smallest picture. I did mention in the webinar that we did, I think it was the Tuesday one, Tom Williams, some of his favorite timeframes. But when we will actually trade live, you know, whilst we would certainly look at a 4-hour chart, the daily, the weekly, we would then zero it down to much smaller timeframes. Now, the smallest that I've been down to with Tom was 10-tick chart.
Wow.
Yeah, it's fascinating how it works when the market moves and you put it into a tick chart. It works the same way, but it's just it's so difficult to actually to trade off a tick chart. So my favorite time frame, I think most of you know this, would be the 5-minute chart and the 3-minute charts. Those two work particularly well, which we'll show you later on as we get through that. But yeah, you're dead on there. I mean, at the moment, you know, I think there's easier instruments out there at the moment. When I say easy, nothing's easy in this business, but there are more obvious moves setting up, and obviously gold was very, very obvious. You might want to take a look at the euro quickly on a smaller time frame, Thierry. Maybe just put a 5 minute.
Let me do that very quickly. On the euro dollar, I've got this one here, isn't it? Euro dollar, 5 minute. Yeah, let me go to the end. Yeah, there you go.
Okay, perfect. So basically there, what I can see as well on my screen, I've got the VSA on my screen, is that the market at the moment has gone into a congested area because obviously they've released news. You've got these big wide ranges on the price bars, but really quite interesting here is what that was not expected necessarily from the ECB. I'd be very interested now to see if the Bank of England follow that. There's a lot of rumor that is what's going to happen, but another cut in rates, but we will see. So Thierry, yeah, back over to you. But yeah, absolutely spot on. I mean, I think we're going to have some. I mean, I can show you. I'll tell you exactly what charts I've got that I'm going to be looking at.
Yeah, go for it. You want to share your screen?
I can do. Yeah, I can put the screen on. Just bear with me.
Or if you want me to finish this and then you can share later.
Finish what your thoughts are, and then we can go and have a look at the VSA over what you've been showing. Yeah.
Yeah, no problems. Yes. Let's do that. Let's quickly just analyze all of this, guys, so that now you guys got the overview on that. So just for those of you who just joined, I know we're getting a flood of questions as well, but we'll answer that very shortly. Just for those of you who joined in quite new today, so far, right, just a quick recap. I'm supposed to do this in the beginning, but of course there were a lot of trades and all that coming up. On the day one, we covered the concept and objective of a strategy, and this is so important if you look at the interview that I did yesterday with Tom as well. And we also covered the stretch principle, and we covered the VSA principles as well, okay? And on the day two, we looked at open equity, right? On how much move is left from a swing perspective, what we got here, very unique. And the open equity can either be used in combination with the range capture or just independently by itself to set the target, which is what we caught as of yesterday, right? After we structured all the timeframes together. The third thing then on the third day, yesterday, what we looked at was MAE. This was very, very interesting, where a lot of you really liked it, where we looked at volatility and how to base our stops based on that volatility. And we went through some stats, which we got all programmed here on TradingView over here. When you take a look over here, we can just do that with a click of a button over here on the OE, MAE, and time 2, okay? Today, we're going to be taking a look at more into time 2 later on. But for now, let me just analyze the markets very quickly to see what trades are coming up, okay? Right, so in terms of, as I said, right? So as I have mentioned, the first thing we always look at, I'll just complete that. So for today, day 4, we will look at time 2, yeah? But before I come on to that, let me just take a look at all the markets very quickly. Before I take any positions, usually what we usually do, and this is not the way to do it all the time, you can construct your own strategy rules. We're just giving you principles over here. The first thing, as I said, I will take a look at all time frames trend. Whenever I get one with all alignment and a lot of open equity left, those are the ones that I will be trading. So for example, on the daily time frame on the euro dollar, right? You can see that that's a downtrend phase one, and the confirmation just came very recently. So follow me on this, right? So what we got here, we got the confirmation here, okay? So whenever we get a confirmation of a top, the orange dot with this, and if today's price is very near to that, we usually, with our stats that we have seen, usually there will be move left. Okay, but however, just based on that, we won't blindly just take a trade. We also correlate that with lower and higher time frames. So let's just say we keep daily as the highest. But the only thing I will be wary of is the weekly. But then the good part is, on the weekly, the OE has diminished, right? If you take a look over here, that's why we take a look at the entire environment. And you will start to see, if you start to analyze the market in this way, you will see some obvious trades where there's money lying on the table. And that's what me and Gavin, we always go for. Obvious trades, not something that, chops around, confusing a bit. Do I want to get in? Why would you want to put your money there and then risk it, right? Of giving back your profits back to the market. So we always look for very high probability setups. And look at this, right? So this is saying on the uptrend phase one, isn't it? So this is what is done over here on the weekly, right? And look at that, right? So the confirmation came over here, right? And look at where it is today. And look at how many selling that it did, but didn't confirm its top. And then finally, it's here today, right? I mean, immediately, even if you do not know any stats or not, you do know that this high here is so far away from where it confirmed. And we know that nothing can go in a straight line. A top is due, right? So according to our market structure, the good part that we have quantified here with the help of the quants, which started in the 1960s, along with similar to Richard Wyckoff's methodology and work, which is why both our indicators are so complementary, the VSA and the SMI, you have started to see that on this framework, we can start to see that if the top is due, a dot will come when the formula is fulfilled, right? So based on probabilities, I can see that highly probably there's a high probability that this top will confirm, right? So based on that, so you can see now, right? So when you align all the time frames, so weekly, even though it's a UTP1, but it's a very low open equity, right? DTP1, it's high open equity because it's so high. Open equity means open profit or move left, okay? High move left to the downside. And then if you take a look on then the 1 hour, then you might start to get confused a little bit over here, right? So let me just go on to the 4 hour a little bit. So that's downtrend as well. But then over here, what then you are seeing was that you're seeing that could be a potential bottom that could confirm, right? So, but according to this framework, it's still a downtrend phase one, right? With high open equity because this confirmation came here. Then remember, we're just collecting all of them together first, right? Before you start to take a position on this. However, on the 1 hour, you can see that is an uptrend phase one, right? With high open equity because it just confirmed it, isn't it, right? And then finally, I will do on the 15-minute, and then we will see how it proceeds on to be. On the 15-minute, it's also a uptrend phase one, okay? So what we got here today, right? With just a confirmation that came on here, right? So we got everything lined up already. So do that for any other instrument as well, right? Some days will be very obvious, some days it won't be. That will also determine your high probability and your low probability setups, okay? Now, here's the thing. Let's put it all together, right? So we got all the different time frames, phases, and how much move left. The more bigger time frames are showing to the downside. The lower time frames are showing to the upside a little bit, right? And so the question now is which is going to lead? And based on your strategy, very important here. So listen to this very carefully. This is very important on your strategy objectives. Your strategy objective, if your strategy objective is only for the next 5 minutes, then you don't need to care about the higher time frames. If your strategy objective is for the next 1 week, but you want to capture something on a lower time frame, then the higher time frames are important. If your strategy objective, what we've been teaching you, is just a range capture for 1 day only, right? The very high time frames are not really necessary unless you want to modulate your strategy based on only those setups. So one strategy can just be where I'll take only range capture where all time frames align, because when all time frames align, price is usually a bit more smoother as well, traders. You won't get that much of a chop. So you have to decide, right? There's no right or wrong. You see, for example, if today me and Gavin, we take, let's say on this range capture, that, you know what, I'm going to take this to the long side, because for the range capture, what we have taught you so far over the last 3 days is taken out its upper stretch line. So there's a high possibility that the BRO will form to the upside, but this is only for 1 day. Once I capture my range, I'm out. I don't care about the higher time frames in terms of, because I don't need to hold on to them for the higher time frames to kick in. I'm just taking for the limited time. So it's very, very important, as also mentioned by Tom as well yesterday. All professionals will tell you, and Gavin tells you this as well, your objective, your strategy objective is very important to how long you want to hold on to that trade with. Okay, so the probability today, as far as I can see on the lower time frames, right, towards a range capture, is towards the upside for euro dollar. It's taken out the upper stretch line, right? Stop for here, right? As we have said, and we can do this, right, together, even though this is not one of my best setups, but we can take a look on the VSA as well. And when it's not my best setup, what do I usually do? I drop my risk on it. Okay, that's how we would trade. This is what Etsikota has said before as well, one of the big market visits out there. He said that when you get a low probability setup, just like in blackjack, you would probably reduce your risk on it. Okay, so I will start to take a look on this over here, and the stop for being here, right? And where will your target be, so that you guys can understand? Most important thing is the logic, right? 8 times 0.8 times 56, right? And you can see this in real time as well. 44.8 is what we are looking for. So from the low, 44.8, 45, 110.49, okay? 110.49. That's where we will come off at in terms of a range capture perspective, okay? That's what we're saying. Highly probably cable will be doing the similar thing. You see, whatever they have told you is happening at the moment. Taken out that. Next one, it will take out its upper stretch line, and then let's see if it goes towards its range. Logical. That's the most important thing. So that even when you take a loss, you know why you're losing. Even when you're winning, you know why you're winning. We have mentioned this to you. What we're teaching you is principle. So they will keep repeating. Whether you like it or not, it will keep repeating. Okay, and nobody teaches like this anywhere online, right? So you're getting really gold over here. And if you have learning this amount in this amount of short span of time, imagine how much you can learn when you spend 2 full days with 40 years over cumulative experience, over 40 years of cumulative experience between me and Gavin, and he being taught by Tom Williams as well. Add that on top, right? That's over like what, 60, 70 years of cumulative experience you'll be getting in person over 2 days in Tenerife, right? So that's really golden. So let me put that in the perspective. 0.8 times 76 in terms of the range capture, 0.8 times 76. So 60 is what I'm going for, the range. And we'll see how this all translates to gather. Okay, 60, 130.90 is what I'm going for, right? And then we'll see how that plays out to be today. and then we will take it on from there. I'm just going to see how that trade plays on to be. And the last thing I wanted to say before I pass on to Gavin over here is look at the DAX yesterday, right? So what happened to the DAX yesterday? Eventually, if you take a look, our target was here, but we got out, right? Our stop got hit over here because it got to 80% range, which is what I'm going to talk to you today on time 2. It got to 80% range of the target, then it dropped, stopped us out, look, and then it came back up again. Interesting enough, right? On this particular trade, still, look, the stretch happened to the downside, BRO happened to the upside. It's just that we couldn't capture it because of our strategy parameters. But the point is, it will keep repeating itself. It doesn't mean that you got to capture the BRO every single day, as long as on certain days you keep your losses small. But then on the days when it really runs, you can then write the profit. It will then overwrite all the losses as well, as long as your total gross profit overwrites your total gross loss. Okay. Great. So I think that's that on GBP USD and Euro dollar is what we will be taking a look at today from what I'm seeing so far in terms of the breakouts and the ranges. The only thing I might be a bit apprehensive is just the higher time frame correlations. Okay, so maybe we will take it at a lower risk on this perspective. You guys can definitely look at that. Gavin, you want to show them the other stuff? Then I can then take a look at time 2, then to finish off at the end.
Sure. Yeah, let's just quickly go to gold straight away. Quite interesting what's going on there. Let me just share the screen. Just bear with me.
Yeah. Interesting that the SMI and the green dot on the BSA came at the same time on the cable.
Yes, saw that as well. Well, we'll cover that. So can everyone see, you should be able to see a 5-minute chart here of gold.
Yeah, can see that. Yeah, awesome.
Well, it's blown through the 2560. That was the level when we started that I was looking for it to hit. But I'll show you why now, because everyone now. I think there's some questions coming in, but I can't see all the questions. So maybe you can read those out to me if there's any questions. But why was I'm very confident that we were going to see some sort of shakeout in gold and a push higher, just the same as Nvidia, really. Look at this. Now, everything is aligning in the background. Okay, I can see that I've got my buyers. Look at the volume. Very important here. You can make the volume even higher if you wish, but it's very high on that bar. The market has not changed behavior. We talk about this all the time, Tua and I, that you know we want to try to trade in harmony with where the market's directionally going, trend wise. Well, our trend starts to change just after here. Actually, you actually get, and this happened. Well, when I came on air and I was talking about gold going to 2560, I hadn't seen that yet, but it just confirmed it. That came in, just a few minutes. So that would have been at 2 p.m. UK time. As we can see, it's a shakeout. It's clear. That's why it had to go back up. But everything was in alignment. So you had the buyers in the background, a bit like we saw with Nvidia. So does this work on a stock? Does this work in futures? Yeah, we can pick up anything that we want. I mean, literally, I can just go from, because I'm a premium member of TradingView. I've got data for everything, really, for all markets. So I can look at the Indian market. I can look at the Chinese market. I can look at anything. But the nice thing is here, I know a lot of you trade. I mean, it would be quite interesting to find out. I did a survey a few weeks ago, actually, in one of the events that I did, as to what people were trading, and it's so different depending on what part of the world you're in. I mean, in Europe, certainly Forex was up there in the top 2, but in America it was mainly futures, the futures contracts. The Nasdaq was particularly popular, but then in India, Saudi Arabia, all around, you know, I can look at all of these markets where and Malaysia, another one, where they can't short the market. They can only buy. So the people were trading, obviously, stocks. So all of these things is quite interesting. Does the SMI and the VSA work in all markets? It absolutely does. you know, and whilst I spend a lot of time talking about volume, we can see something that's going on right on your screen right now on the 3-minute chart of gold. It's called the opposing principle. All right, the opposing principle. Okay, and again, you should all be able to see this here. You've got PS. So there's your shakeout. The volume's massive, but then professional money come in and take profit here. Well, I can see that. Now, you might say, well, what signal would you then look for if you're going to scalp the market? And I've written a document, which you can all have. It's called Super Scalper. It's a trading plan. Now, here, I'll go to a much smaller time frame. I'll jump to a 1-minute time frame. And what we're going to see, when the market sold off over here, it distributed on a 1-minute chart. So it went up and then distributed. Then SMI comes in and tells me on a small time frame, price action is going to push higher. It does. But as Tom taught me, markets don't like very high volume on these up moves. I don't know what he meant by don't like, but what I do know is that SMA, well, it's confirmed it on a 1-minute chart. So the area, which I gave as the target at 2560, was supported on multiple time frames. Now, one of the other time frames that Tom used to really like to use, which I've mentioned, is the 15-minute time frame and the 30. But I'm going to just stick to the 15 for the moment, because here, what you can see on the 15-minute chart is this very wide-ranging bar here on very high volume. Now, we can see here, COMEX has come out and said there's some news. The data dump, gold hits all-time high. Yep, that's pretty much what we've been saying, that there was going to be a move into gold, and it was accumulating, and it definitely was. But now look at the bigger picture. This again, and then I'm going to go to the Nasdaq quickly, and then we'll hand back to Terry, because I do want to make sure we try and finish on time today. But let's just go to I'll do the 4-hour chart actually here of gold, because that's quite interesting. When we talk about why is gold making a new time high, why does 2560, which is currently where we're trading, right on it, okay? There was no accidents, right? Because the 4-hour chart showed me where the buyers were in the background. You can see the volume is massive. The next bar closed higher. Now you'll notice that we went through this trigger number here, which is this little dotted line, which is generated by the VSA plugin, which we call VSA Lite. As soon as it went through there, which was much earlier on, I was able to zoom in and zoom down. Now, if you want to use a 1-minute chart, be my guest. There's no right or wrong, but in Super Scalper, we actually use a 1, 2, 3, 4, 5-minute chart combined. And when you look at you know, the SMI, you look at the VSA combined, it's all about the, and Terry said it perfectly earlier on. He said it's all about probability. Now, I did see, I think, a question about the VSA indicators. I didn't read the whole thing, but I think it was, you get a lot of, especially on the small time frames, by the way, you get a lot of green indicators as the market's going down, and you might get red indicators as the market's going up. Well, there's a very simple answer for that. When weakness appears, it happens on up moves, which we just saw on the small time frame in gold, right? When strength appears, it appears on down bars. But what are we charting in VSA specifically? We're charting volume, spread, analysis, or often referred to volume range analysis. And I've said it 100 times, I'll say it 101 now. The market is like a snake, and you can see this snake, right? It doesn't just go up and doesn't just collect. Well, there are times it has done that, and that's wonderful when it does happen. It happened in the pound this week. But when you get certain setups, you have to look at the big picture and then zero down. Now, a lot of the mentorship courses that I do, the one-to-one training that I do, we focus in on what the individual trader wants for their personality type. Because that is one of the first questions I try to establish, you know, what's risk tolerance? Because, again, I've got a very clear trading plan. I know Turu and I, we'll discuss this in Tenerife. And I've added to it, and I'm not going to make that public at the moment, but because, you know, there's some stuff in there that's quite advanced. But when we get to Tenerife, one of the things we'll focus on, Tira and I, is creating a trading plan. But a trading plan has to work for everyone. You know, you could give them a plan, and you've got 100 different people. They're going to look at the plan and say, well, that doesn't work for me, or that does work for me. So I'm going to show you a way that you can tweak it to your personality type. And that is something we get into the depths of psychology of trading. But actually, I'm reading some really good books at the moment on exactly it, because I'm publishing my next book, as many of you know. A lot of what's in the book, when I've been back and looked at some of it, there's scientific proof available to us about the way the brain operates. And there's a lot of books on this. And some of them are scientific, some of them are more spiritual. But again, it's very important to take the two together, in my opinion, anyway. There's a spiritual side, there is a scientific side, where everyone who's a scientist wants proof. If you listen to Professor Brian Cox, he wants proof. But let me go to the NASDAQ quickly, because I promised I would, and then I'm going to hand back to Tiru. So we'll just go into the future. First of all, this is what we're covering. I was going to cover crypto today. I'll probably try and do that tomorrow, because we haven't got time. But if we put up the NASDAQ, and we're on a 4-hour chart, we just had a few hours ago a no demand indicator. Previous to where they'd sold it off, it's gone up above this bar on no demand. Now, when the buyers stepped in down here, it was very much confirmed with what we saw there on the 4-hour. But now what happens when I go to a 3-minute chart? All right, so you've seen no demand. What does no demand mean? Very straightforward. It means that as the market's rallying into an area of previous resistance, there is hardly any volume, because there is no demand. And if you come down to the 3-minute time frame, you can see why. How can I go from a 4-hour to a 3-minute? You can see where the sellers came in. And it marks the low of that bar. Once it triggered through the low of that bar, it sends an alert. Now, I'll give you where this is going to go to, because people say, well, how are you projecting it? 19,250. Okay? I've got it on the other screen here. Now, it's a bit the same. How do you know gold was going to go there? It's not the word no. It's based on calculations based on, for me, the VSA signal, and then the SMI indicator right here. Look, there's the selling starting, there's the confirmation. And as we're coming down, this is something that I'll do in a lot more detail in Spain when we go to Tenerife, is talk about weak bars versus strong bars. Okay, now in TradeGuider, this is our VSA Lite system with SMI. We actually have a mechanism where we can see the trend of price just here. We can see it's turned red, and we can see that the market has what we call down bars, where it closes near the low, down bar, and up bars. But what's interesting is if you see here the market with a wider spread going towards an area of previous support, which it is, it's very likely to go down through it. 19,250. Okay, now if I see an opposing principle, which I haven't yet seen, I would change my view. But at the moment, this is telling me everything that the NASDAQ is selling off for the last half an hour to 40 minutes, approximately. And it may keep going. Tiru, I've got there's 5 minutes left. I know you want to keep it about, we can overrun 5 minutes. I don't think it's anything you want to add to that, Tiru, because I think it just shows there while we've teamed up. Because up at the top here, we could see where the weakness was. The market does repeat itself. Once, down. Twice, down. 3 times, back down. Okay, does it automatically just collapse? No, it'll take time. This could take at least 2 to 3 hours, maybe longer to get to there. And even if it doesn't get to there, right, I can see what I'll be looking for here to short it. Tiru, back over to you. And you can take
Yeah, you know what? I mean, that's perfect analysis where everything just matches up. I think that's what people should be going for, isn't it, Gavin? Something where everything aligns. I know there's a lot of times you and I have said that when it's not that clear on that instrument, just stand aside, right? Why do you need to trade it?
well,
But
this is you've just nailed it. What I was asked a question by a guy yesterday, actually, who I was talking to. He said, "So come on then. So Tira and you have got a black box, right? Black box." I said, "What do you mean?" He said, "Yeah, it looks every time you've said this is going to do that, and Tira said the SMI." I said, "It's not a black box at all, and we've never marketed it as such. But I tell you what it is. When you combine the two, it's decision support.
Correct.
That's it. If you, I mean, Tiru used to work in the medical profession, right? If you now
Yeah.
go, I mean, apparently, I've just heard on TV, I don't watch the TV very much, but the headline was the NHS is in crisis. It's about to go bust. I don't know how that, they've been saying that for years. And I've used the National Health. My wife's used National Health. Absolutely brilliant. All the appointments, they're very efficient. I don't know what they're talking about, but I'm sure there's some truth in it. But Tira, it is very much, I'd say there's three elements really that we focus on. We look at smart money. You called your indicator SMI. You called your company Master the Markets. You talk about trading the truth. Right? That's pretty much it, the truth about the market. And when you can see, like we can see here, where selling took place on the NASDAQ, where we saw buying and selling on a 3-minute time frame in gold. And you can see that the markets, you can see why people struggle with them, because they seem to just do their own thing. But if you've got a system that's written down and you say, I'm going to follow those rules, at least you've got a framework, right? So you've got something to look at. And if you lose a trade, you can learn from it
Spot on.
and not make the same mistake.
And you know, the most important thing I think on losing is you must know why you lost. It's very important. And when you're winning, you must know why you're winning. It must be based on logic. It's not like taking a trade on the fly. That was what Tom was saying yesterday as well, right? We all, of course, every professional is going to say the same thing, isn't it? We're going to be singing from the same tune, right? I mean, what else can you do? All roads lead to the same place, same destination at the same point. You know, we got to say the same principles. There's no other way about this.
Well, this is why I took up golf. Because I know I will always lose, guaranteed. I know that my ping golf clubs will go into a lake in the next 2 to 3 months, guaranteed. Because if you want to play golf or you want to trade, we're going to come down to this target now, so this is going to be quite interesting. But if you want to play golf, I think I told you this story before, Terry, when I went over to the guy that runs the club across the road. It's a championship club in Bramshaw. Hit the target now, just hit it. Now, where's this going? Watch, right? That was the first two. I had that. Now, we're going to be right on this. Now, look at the volume increasing, and I'm almost 99% certain now where this will go. I'll show you. There we go. Set for muted open, right? Which it's just done. They're marking this down. Would you want to short on a down bar? No. You short on these type of bars here, right? If the people do that, they say, "Oh, it's gone. You've got the target dead on. It's hit the 250." Yeah, it has. But where the best place to short it is back up in here. If it comes back up, and we don't, and again, it's decision support more than anything else. But there's a good example of it right there. And I've done this with you, Tiru. Well, we've been working together for a number of years now, and when we do these events. Like this week, we've decided to do this course, if you want to call it that, because we're not charging for it, to show people that this is the truth. Yeah, this is it. This is it. You can't say, because it's live charting. You're not using a PowerPoint and saying, you see, last week that's that.
Yeah.
You know, oh, it's gone through what Gavin said. How can he know that? Because it has to. It's so simple. Because you can see the weakness in the background. And the whole trend. Now, if you look at the 1 minute chart, I mean, just to finish off, and I'll hand back over to Tiru, but right, Okay, you can see there's no interest up here, but look at this price bar and look at the last no demand bar, right? And then look at the SMI indicators on the 1 minute chart. They're both telling us, they're all saying the same thing. Now you might argue, well, hold on a second. You've got a little bit on a 1 minute chart, you've got a blue and it's gone up and then it's come back down. Of course, you're on a 1 minute time frame. It's going to do that. That's why you use a 15, a 30, or 4-hour chart. You build the picture. And if you can build the picture, which we can guarantee, we can show you how to build the picture, how you interpret that picture is down to you as an individual. And that's why we're doing this event in Spain, because we believe, and certainly what I've written about in my third book is key. Is key. Both Tura and I come from exactly the same page on this, as do his team. You know, that he's got a great team around him. Same thing. You've got to believe. We call it trading the truth. You've got to believe in the principles. If you don't believe in your principles, you won't be able to call a trade live and say, well, that's that. And again, we'll be showing you, right? Because we're going to be there on the Friday when the markets are open. Same thing. Same thing. Terry, back over to you.
Awesome. Right. So let's take a look at this. I know some of you have asked about the E-mini futures. I'm just going to put it all together. Sean, I know you did ask that. We haven't forgotten you. So let me just put this one here. I'm telling you guys, when you put it all together, it will make much more sense, right? So this methodologies, SMI and VSA, will save you the laborious work that you need to do and the tons of losses that you will incur if you do not know how to read the market. So this is one gold thing that you have in front of you. So do take advantage of it and learn these principles. They're very, very important. Just a quick thing before I analyze the S&P, just a quick thing that came to my mind. Some of you are asking, okay, how do I learn this concept much more better? I think as Glenn has put it, www.7stepstoctp.com. In terms of those of you watching in from YouTube, you can go to there, put your name and email and then a number if you want, and then you can get the free video series on that. You will definitely learn a ton loads, very systematic manner as well, over 15 years of research, okay? Now, the other thing also is, I mean, this is the reason why because the way that we teach and everything, right? Me and Gavin, that's why we get invited to so many places, Ninja Trader, Society of Technical Analysis. Yesterday, we interviewed Tom Basso. So a lot of things, right? Because they can start to see, the people can start to see, you know what, this is the truth, is high quality and really makes sense as well, you know, and in real time, we just don't keep talking hindsight. Now, the other thing on TradeGuider.com, when you click on TradeGuider, you can also get Gavin's book as well on the smart money, on the following in the shadow of the smart money. You can put your email and your name over here and you can get the link towards that. The other thing that you can also do when you click on Trade to Win over here, some of you are asking also on YouTube and on Zoom chat, how do you get hold of the SMI and the VSA together? What you can do is when you go to Trade to Win, you can click on packages and go to SMI software, and then you will go to the page on SMI and VSA methodology. Over there, you can then find links to buy it. If you got any questions, you can always email us at clientservice@masterthemarkets.net or sales@tradeguider.com. Right. To finish off for today, I'll finally analyze the S&P futures as requested. So the first thing that I'll take a look at, as I always say, for those of you who say you're confused or where to start and everything, that's why we got both the methodologies, right? So the first thing is always market structure and trend. Okay, so here you can see this is a downtrend phase 2. Always start off with that, right? And in terms of the phase 2, the confirmation just came yesterday. So usually after the confirmation, there is move left. But remember that this is a downtrend on the daily time frame according to this framework. It is not a holy grail, but it's a framework, okay, where you can base our statistics and our decisions on. Okay, so that's the downtrend phase 2 over here. We need to correct this code over here. We are starting to work on that. There's one variation that hasn't been coded, but we'll start to get that done. And the other one over here is over here that you can see on the 4 hour, that's already done for us already. It's uptrend phase 1. These are the beautiful setups we would like to look at, right? Where the VSA is also on the green side as well. So all is correlating. Confirmation came up here, okay? Uptrend phase 1. Right, these are the best setups that I usually like when I'm trading the stretch principle on top of this as well. Okay, then the other thing is you can see even on the 1 hour time frame, uptrend phase 1, beautiful as well. VSA nice and green for today. Yeah, I'm talking about in terms of trading for today. So the lower time frames are pointing to the upside, and even on the higher time frame, there is still move left. High probability that the range capture can be towards the upside, the BRO, okay? But let's put the stretch principle in alignment together with this on the 1 hour time frame. I'm just going to take the open price so that we got a correlation of this. So when did the open price happen today? So that was at 558 where that happened, right? So 558. So I'm just going to put the blue line here because I do not have the stretch indicator on here. We've got to get that transferred over as well. So we'll do that. So 558. Let me just get that very exact. The open is, yeah, it's 555. Oh, right. Okay, it's bang on. So it's 0.00. Okay, so 558.00. So I'll just put that as 00. That's the handle there. And then we got the blue line there. Okay, great. Okay. And then what we can then now see is that for today, what it has done in terms of its lower stretch line and all, I'm just going to take that from just the spot over here, just roughly. And then we can take a look. That's about 21 points it's doing, I think, 555 to, yeah, I'll just do roughly 21 points because I don't have it exact. So the lower stretch line over here will be 21 points below that. So we got 5537, right? So I'll just do roughly, right? You guys can calculate it exactly later on, right? And then the other one will be equidistant over here as well. So I'll just do 21 over there, 5579, okay? 5579, okay? 5579. Remember, I'm just showing you examples here. Tomorrow, I'm just going to put everything together where the entry can be and everything, okay? There are different types of entries, what you can do. So so we got the upper stretch line and the lower stretch line. So for today, when you correlate the time frames, because the lower time frames are quite strong to the upside, as well as open equities more to the upside, I will do a higher probability towards the upside, towards capturing the BRO, towards capturing its range for today. Okay, and the ATR is telling me that it's 83.94. So 0.8 times 83. Most of you have been coming from most of the days. I can see some regulars over here. Charles has been coming very regularly. Charles Atmore, Biz, and a few more of you as well. You will start to understand that what we are doing over here will become habitual for you, right? In terms of range capture. So 80% times 84. Actually, I'll do 83 because it's 83, isn't it? We'll just round that down. 0.8 times 83. 66.4 over here. So when I do 66.4 in terms of range towards the upside over here today from the low point, right? So let me just get the low from here, the low today. So this is something you guys can take a look at as well. We'll be monitoring this too. So the low point for today, 5554. I'll just do round numbers, 555 just for simplicity, plus the, forgot that one, 66, right? 5620, yeah, 5620 is what we are looking for. So in terms of our target for 80% range capture for this strategy objective, not on OE perspective, which we taught yesterday as well, So different objectives will have different targets. Yeah. So 5, 6, 20. Remember that we get all different types of clients that come to us, but because we're strategy developers, we can develop any kinds of strategies based on your objective points. Okay. So that is where we have, because we got some clients like Janice and all that who also trade on much more lower time frames, but they use the same principles what we're teaching you here. Right. So let me just actually, can I undo that? I think I need another line, isn't it? That was for the upper stretch line. Now the other line here, so this was towards the, sorry, let me just get that. Towards 20 points, right? So this was 555.8. This one is right, 555.8, 20, 5578. That's fine. We'll just leave it there. And then this one here need another target point because I moved the upper stretch line here. 5620 is what we are looking for. And there we go, right? So we got everything in place now, right? So we do the exact same thing again, which I'm not going to go through now. You guys can do it in your own free time. But if the probability is towards the higher, the upper side, after this retracement, so what we will look for is, this is an uptrend phase one. Now here's the thing, right? So put it all together. Like what Gavin said, this is not like a black box signal or whatsoever, not a buy and sell signal. Like you close your eyes and then that's it. It'll just do everything for you. This is a framework. Then you got to use the structure to help you towards the decision factors. Okay, which ones are you going to trade? So you can see on the 1 hour, the confirmation came here, right? So nothing can go in a straight line forever. So we wait for this top to confirm first, because OE is getting low on the 1 hour based on the principle that nothing can go in a straight line forever. Even when I put the OE tables over here, and if you have to measure it, which is what we saw yesterday as well, remember? When you put the OE tables and all of that, and you put it together, you will start to see that this table, the stats number from here will go to very low numbers. So for example, here, if you can see from here, it has traveled 90 points. Look, to go past 90 points, there's only a 5% chance. So high probability it will make a top. Okay. For those of you who want to scalp for the shorter term, you can take maybe just the downside towards making a top if you want to do it that way, another strategy objective. But if I stick to the same thing of capturing the BRO, then you can start to see over here that I'll wait for the top to confirm, right? And then I'll wait for a bottom. Okay, but before I wait for the bottom to confirm on 1 hour, this is where we can start to drop the timelines and get an earlier entry. Okay, this is something that you guys can look into later on today. So as you can see, nice volume spike over here. I'll put the VSA relative volume here as well. Now that we can then analyze that together, right? You can see the VSA relative volume, all the volumes are spiking, right? Let me just get rid of this one here. Right, so there you go. So we got all of that now in place. So this is good. So as the sell-off happens, good volume spikes. I like that before it starts to turn, to signal that this is the best ones me and Gavin would like. Okay, it's good. It's looking like it's selling. People get tricked into that. Oh, high volume is going to go down more. And then suddenly you get a reverse. So buyer bar, bang on. Now we know that's a fake out. The volume was towards the buying pressure. Next bar is closed higher, right? And then that aligns with highly probably that becoming a bottom on the 1 hour, and then zooming past up towards this BRO bigger range. You see how everything is aligning, right? In terms of that kind of a mental rehearsal towards that objective. So this is what we'll be waiting for. So now, of course, we won't jump in. We need to see the price confirming our analysis towards that range capture. Okay, so that's that one there. Hopefully, Sean, I've answered your question in terms of the analysis. So higher probability towards the upside, what I'll be looking for. In summary, I'll wait for this top to confirm first before I look for the bottom confirmation on a 15-minute time frame. Okay, so I'll wait for that. And look at that, just as I say all of that, potential buying is coming in and signaling. Right. Okay. So we'll wait for that bottom to confirm with the blue dot with the SMI, and also for this to turn gray or green towards then the 1 hour turning around. Okay. Highly probably the 1 hour will top confirm. Yes. Carry on.
Just a real quick one. Go to the 1 minute chart for me, can you? I'll show you something.
On the S&P, yeah?
Yeah, you can go S&P or you can do NASDAQ. I've got it on NASDAQ, but it's going to look similar anyway.
Okay. Let me do that 1 minute. Yeah, go for it. S&P, yeah.
Yeah, okay. So if you bring more bars up, so maybe, I don't know, 50 bars, something like that.
How many? Maybe this one up to here, maybe?
Right, okay. So, yeah, that's fine. So you see the no demand, right? And you see the trend change on a 1 minute chart, right? All the dots turn red. So that's a trending system. There's an area of support, which it's hit. It's probably just as more. Actually, if you can put the NASDAQ up for me quickly, just the NQ futures, and put up the 1 minute chart on the NQ if you can.
This one, NDX, is that the one?
Oh yeah, you can. If you've got the futures market, then it's just the yeah. You could use the index if you wanted to. I use the futures. So if you click on futures, and then it's NQ futures.
Even if you do NQ now, it will give
it should come up. Yeah.
This one, right? E-mini.
That's it.
Futures, right?
Yeah, that's what most people are trading. They're not trading the spot.
So there you go. So I prefer old Chelsea. So let me do old Chelsea. So you want the 1 minute, right?
Yeah.
So there we go. Yeah, big volume spikes there.
That's it. Yeah, you could just look. I mean, I've got it on my screen here as well. And there's a lot of buying on the downward. There you go. You got it.
Yeah, got it.
All right, and you can see there. So it not only went through the short, but they brought it back, and that's exactly how the markets work. Look at the volume. You've got two just on a 1 minute chart, but if you put up like 3, 5, maybe even a 7 chart, it doesn't matter. Don't do it now.
All right, okay.
That's what buying looks like. That's what SMI is telling us. That's why price is going up now. So when we started, I was talking about a short down to a level, which it went straight through it, and then they brought it back. If you don't believe in VSA and SMI, then nothing will convince you. Nothing. Because you can't do any better than showing it on a live chart. I don't know what
Spot on.
Yeah, I don't know what else to do.
I think this is the fourth consecutive day that we are showing it. So that's really good. So the last part, I think, Gavin, I know we got 10 minutes, right? Before we close up, you got to go for your detective homes as well.
That's tomorrow. That's tomorrow.
Oh, that's tomorrow? Yeah, okay. So I think the last part, guys, what I want to show is, so this is good towards the 1 hour now. You see, just like what we said, towards the 1 hour confirming. So wait for that one there. Now, towards the last part, what I want to show you is time 2, right? So as I said, so the other thing that the market structure with what we have done with the SMI, the Smart Money Indicator and VSA, you can find out time 2. So if I put a distance, right, a standard distance of how long it takes to get there. So let me say I want to put a distance of, let's say, let me just cancel this for a moment. Just give me 1 minute. So I'll get a rough distance now. So let me just see, if we did 10 points maybe, right? Let's just do 10 points here on the 1 hour time frame. So if I did time 2, distance. So what we are doing now, what are we doing with the time 2? So what I'm doing is, think about this as running a race, right? What I'm doing now, traders, is there's 2 types of time, okay? One type of time is towards the cycles, okay? How long does it take for a cycle to last? A cycle as in the swings before they turn around, right? That's one part of parameter we're looking at. Then the other thing is, which I'm going to show you today, you can find out about the time stuff in terms of our 7 steps to CTP. We'll talk about it over there. In terms of time 2, right? Time 2, what I'm saying is, if you kept the distance constant, right? If the distance was constant, okay, from point A to point B, I've now locked in the distance, let's say 100 meters for these runners. And let's say only maybe 50 of them usually can get to 100 meters, right? Now, 50 guys are going to start from point A. Now we're going to clock them, right? Just like in a race, isn't it? But the distance is kept constant. And then I'm going to find out out of that 50, how many reach there within 1 minute? How many of them reach there within 5 minutes? How many of them reach there within 15 minutes, and all that and so forth. So the same principle what we've applied over here on time 2. So just the difference is that we change all the units, right? So we lock in a distance. Let's say I'm saying now I want to find out, okay, I'm going to put a target of 10 points now, just on 1 hour time frame on an OE perspective. Whenever the dot comes, whether short or long, I'm going to take for 10 points, let's say I'm saying. Then I'm going to then find out with that distance locked in, with the number of runners which get there, how many of them get there within 1 bar, 2 bars, 3 bars, and all that, right? So let's do that together. So what I'm going to do is now time 2 here, right? And again, you know, the fascinating thing is that one of our clients, just like you, came onto this, got inspired by this, you know, came on and learned this fully, got immersed himself, and then volunteered to code this entire thing for us on TradingView. So our community itself lifts itself. And that is one of the main reasons why we are also doing the Elite Traders Mastermind Annual Summit in Tenerife as well, okay? For all of us to grow together, right? As a collaborative effort, as a team. Right, so I've locked in my 10 points over here. So this is impressive. So in a click of a button, I can get all these numbers. So less than, so I'm just going to put all these 1 bars and all that. I'm just going to teach you that in a minute now. So what I'm going to now find out, right, is, okay, so the points are locked in. So for 10 points, right, I get 1,196 dots, which get there to 10 points, right? Now, how many of them get there within 1 bar, right? 41%. So what we really want to look at is about 95% of them, which is they get there within about 10 bars, okay? 80% of them, though, get within 5 bars. 5 bars. That means on a 1 hour time frame, get there within 5 hours after the dot comes in. What does that mean? That means if your target is not hit within 5 bars on a 1 hour time frame, okay, what can you do? What would you do in terms of your parameters on your strategies? Yes, correct. Some of you already typed it in. As you said, you will start to trail your stop loss a bit more tighter. This is exactly what we did, right, on day number 2 in terms of the cable trade. I don't know if you guys remember or not. In terms of the cable trade, what we then did is over here, as it approached towards our target, you'll remember, some of you have been coming regularly, Charles Atmore, Biz, and all that would have recognized this. As it got so near to the target, but it didn't, but then the time was passing by, we trailed it tight, locked in some profits, okay, and didn't lose back what we had open profit so far. Okay, right. So that's the time 2. You can use it in so many ways. That's a stats, and you can combine that with any kind of strategy. Okay, great. So I think that's that one that we have covered on so far. So for today, what have we covered? We covered quite a lot actually today on recap, isn't it? So we covered in terms of what's the first thing you should do always when you look at charts, trends, and phases. I did that on the S&P, right? The other thing is align that with the stretch principle. Third thing is then look at the VSA and the volume as well. Combine it all together. This is definitely correlating on the S&P. A bit of patience for it to confirm its high, and then for the 15-minute to confirm its bottom towards the upside. If you don't get a signal, then we sit back and then we look at other instruments which are aligning. Okay, right. So I guess that's that on that one. This is beautiful because even the VSA is aligning, volume is aligning as well. Same thing happened in gold as well. I give you all that homework, which what Gavin showed you all in the lower time frames towards his range capture, towards the stretch, right? If you look at here quickly, I just show you, look at that, right? So all of that over here, upper stretch taken out, right? And towards his range, and that will align also with your higher time frame as well on the daily towards the upside, and the weekly showing that there's still move left. I'll let you guys go through that at your own time. Okay, right. I think with that, the last part was just to, I know a lot of you are asking about the Tenerife event who are actually joining in just recently. We already got a lot of requests to join that. Now, let me just share my screen on that one. So over here, so the landing page is getting created. I know a lot of you are asking for that as well. So we will be sharing that with you very shortly. Glenn is preparing that. Now, in terms of all the links that we have shared with you, first is 7 steps to CTP.com. So definitely go on to there. You will learn all of this in much more detail. Trading in the shadow of the smart money I've shown you before, TradeGuider.com. Go to there. Click on the Trade Guider button. You can email them. They will send you the book. And then one-to-one coaching session. Some of you already booked it in already. You can then go over there to book in your dates and times. There's not much left for September, but book in what you can. And then if you need more availability, just email us at clientservice@masterthemarkets.net. Okay. Now, the Elite Traders Mastermind Annual Summit, as I mentioned before, is going to happen in the Ritz Tenerife on the 15th and 16th of November. We're going to be including all the meals in there as well, lunch on both days, right? And a beautiful dinner on the prestigious El Mirador. It's going to be overlooking the ocean. It's such a beautiful restaurant. I've been to many hotels in the world, but I must say, traders, this is one of the best ones, right? Ritz-Carlton, I mean, and Tenerife, and it's one of the big ones as well. Almost very humongous. It's got a big golf course, private beach as well, where everything is all, you're transported with your private buggies and all that. So it's an amazing, phenomenal experience. So it'd be really great if you guys can join us there. 2 days full immersion with us over there. Great. Holiday getaway, as well as social, as well as a learning experience where all of us can come together. Great traders are going to be there with our community. You're going to meet the guys who coded this entire thing and then really uplift our entire community. You will get your re-inspiration back again and get back on track towards the new year 2025. Okay, at that time. That's some nice views over there with the Ritz-Carlton. What are we going to be doing over the 2 days in terms of learning? Going to be covering the 5 main research updates, right? And then we also that it can help you towards boosting your strategy to sustainable, scalable, and reproducible performance, and then also so that you can achieve consistent performance. Okay, so the research updates will be giving that to you. You can apply it on any time frame, any instrument, towards any strategy in terms of price and volume. Right, and the final things is if you want to find out more about it, email us clientservice@masterthemarkets.net or sales@tradeguider.com. We've given the discount codes on your different membership levels as well, according to different membership levels on SMI and VSA. The Trade Guider team will be soon emailing you as well. You should have got the first email. If you haven't got it, email us. We will send that over to you, and the page will be ready very shortly as well. Okay, I guess that's pretty much it. Gavin, you want to add anything else towards the end?
Couple of quick things. Yeah. So good question coming on email. So why did we choose the Canary Islands and not Florida and blah blah blah? Well, we are going to come out to America at some point, but the reason. Well, there's 2 main reasons, I suppose. Number one, because Tira has been to the resort and then, and endorsed it. Great. Number 2, cost. You think Ritz-Carlton, you're thinking like £800-900 a night or dollars a night. It's not. We've got a very good room rate. We've got very good. So I just want to be clear on one thing, though. It says all meals are included, but then it's only 1 dinner, not 2, just to be very clear. Yeah. I can imagine someone say, all meals, but you said there's 1 dinner and 2 lunch. The lunches is included, but we need to make that more specific, Tiru, because I know that's people say, well, no, I think you said everything. Breakfast. What about my afternoon snack at 3 o'clock after you've called this gold trade and you've done this? But yeah, I'm sure there's some things we're working on at the moment, which I can't discuss publicly at the moment, but very, very exciting. But the weather. Now, for those of you, there's some of you are coming in from the US, guys in New York, it's absolutely freezing in New York in that sort of October, November. It's coming into what they call the fall of stroke winter. Yeah, Tenerife. I've been to most of the Canary Islands. I've been to Tenerife. I've been to Gran Canaria. Temperature 22 to 24 degrees roughly. You can never guarantee that the weather's going to not rain. But it doesn't usually. When I've been to Tenerife, and it's never rained. But it doesn't mean suddenly, it doesn't matter what part of the world you're in, you can get inclement weather. but the actual temperature at that time of year that we've chosen is absolutely ideal. From what we can see, it's not too hot, it's not cold, and that means you would be able to sit outside when we're having our lunches or whatever. So that's the reason for that, and I hope that's answered your question, John.
Great. I think just a quick one on the questions, Gavin. Some came over here. I think we answered most of it. Bis was asking where's gold going next. Bis, I think we've said that in terms of the SMI as well. You can look at that in terms of probabilities, in terms of the weekly and the daily. So put that on the chart. You're already an Ultimate Advanced member already, so you can put that onto your charts, and you can see how that carries on. And you can see that if you need some help, please do book the one-to-one, and then we can do it on Zoom. The other thing is, anonymous attendee, I think they don't want to be named. A question is, what can we do first on opening chart? Because I learned chapter 1, 2, 3, confused, what can I do? I think we mentioned that as well, Gavin, hasn't it? Like, look at the market structure first, look at all the trends, and then look at the volume, and then look at the turning points, right? So I think we've mentioned that.
Yeah, it depends which book this gentleman or lady is referring to. I don't know. I mean, it could be Trading in the Shadow of the Smart Money. It could be Master the Markets, which is Tom's book. Okay. Off our website, it's probably my book. But if you've only read chapters 1, 2, and 3, then you're only a third of the way there.
Correct, yeah.
So I would suggest you read the book, and then by all means you can email me and with any questions. But what we've said here, and I don't know how else to do this, is there's the market. I mean, the great question, where's gold going next? Because if you keep getting it right, which we have been, and we got the NASDAQ and all of that, then how is that working? Why? And these are all things that I'll show in Tenerife. Some of the stuff we're not going to do publicly, of course we're not. And why should we? I mean, because there's certain things that we've spent a lot of money developing and a lot of time in the educational side. I mean, my third book, which I know people go, well, when's it come? But 12 years to write. But you know something, the more I now know is something that definitely will apply to traders and investors worldwide. They'll realize why it's said that a large percentage of certainly customers in the UK that we know about are just not making it, or they give up, or they have. The one I love, though, I love this one. You know, I haven't got time. You haven't got time to learn something. Do you know how long it takes for a professional athlete to become an expert? Right? It takes them, well, they say to do anything proficiently, it's 10,000 hours. I don't believe that to be true at all. But in fact, we've proven with certain clients of ours, I'm talking about two of my clients here, that very, very quickly, we're talking weeks, possibly a few months, depending on the application of the individual that learns. Some people will learn quickly. Some people will take a lot more time. Some people will, use YouTube. Some people will read books. Everyone's different. I mean, I've looked at your bookcase at the back there, and there's a really good book that's missing off that.
Yeah.
Trading in the Shadow
of the Smart Money. That's right.
I know you've read it, but you haven't got the actual copy. No, it's fine. It's fine. I'm joking. The point is, but all the books you've got there, or the majority, I've got.
Yeah, definitely. I think it's common books that all professionals all read, isn't it?
Yeah.
I think there's one last one. Can you show, please, gold spot? Will it work the same for spot and futures for gold? Of course, Syed. I think he's asking from YouTube. It will work for anything, right? Whether it's futures, whether it's spot, because the principles are the same. I think we've shown you all of that. You can see in terms of gold towards range capture, towards OE, that's still soaring towards the upside. What we did show on cable, as I said, timeframes were not correlating. It might start to hover, is what we are seeing here at the moment as well. Right after the spike through, euro dollar is the same. Remember, you can use time tool over here and start to trail your stop losses tight, right? So because usually what we found is by 3 p.m. we'll hit your target. So by now you can start to break even and then see if that turns around towards the target or not. So that's one thing. Remember, I did say that because you're not all matching, so the risk you can reduce on that. Gold was a perfect one that even Gavin also showed as well. The other thing was the S&P, right? So keep an eye on the S&P. What we looked at, we will take a keep an eye on that as well. I think that's a wrap up then for today. I think we covered quite a lot. So for tomorrow, what we'll do is we will put it all together, right, in terms of the strategies and everything, and we'll show you some examples. 7 steps to CTP, you can definitely see everything coming together over there. I think that was the one we showed you over here, 7 steps to CTP.com. Those of you watching on YouTube, you can find that, as well as Gavin's book as well, Trading in the Shadow of the Smart Money. I've definitely read the ebook side of it. Definitely great book. I highly encourage all of you all to read that. Great, traders. I guess that's a wrap up for today. Any last few lines from you, Gavin, before we wrap up?
Just to say, no, thank you everyone for your time there. We always overrun because there's a lot of information to give you, but I don't think we need to apologise for that, because this is something that I know from the emails I'm getting and Laura's getting, and I know you're getting with your great team out there. I mean, the feedback's been really good, and the reason we do it is it'll click. Right.
Yeah, exactly.
Realize, with a piece of software that can alert you.
Correct.
Trade setup using what we've both generated over, well, you say it is 40 years. You made me feel old then when I went, oh my God, I am old. I'm 57.
It's actually, you know what? If you add up Tom's experience as well, it shoots up to about 70, 80, isn't it? It's crazy. Wow.
Plus a lot of the people that I've worked with, and people that you talk to, like Tom Basso.
That's right. That's right. Yeah.
We're blessed in many ways. We've met some really, really good educators in this industry, and we've worked with some of the best. And at the same time, I would say that this industry that we're in, if you look at the promises of Richards, buy my product and you'll be a millionaire in 3 weeks. I'm not saying any names, but you've got to look at the people that actually have made millions in 3 or 4 weeks, and they don't exist. So when we say trade the truth, what we mean by that is, if your expectations are realistic, if you're prepared to put in a little bit of work, not too much, you're prepared to open your ears and use your mind like a parachute. Parachute is no good when it's closed, does it? Although I must admit, I just watched the launch of the SpaceX.
All right.
Did you see that? And then they're walking in space going, well, we're not sure if this spacesuit works. I'm like, why would you trust it then? Because they've trained for maybe over 1,000 hours. So when something went wrong live on BBC TV, they went, she can't close the hatch. The lady at SpaceX or whatever, it was a lady, she said, oh, don't worry, they're fully trained for this. I thought, wouldn't it be wonderful if traders could take the same approach? You wouldn't go to space without being trained. Well, maybe you and I probably would, just for a laugh. No, I'm joking. We're not. We are risk averse, and the truth is, when you get on a rocket like that, and there's 4 of you, and you're all going to do there's 3 of them. The lieutenant commander, I believe his name is. I forget his name, but he's the ex-pilot and it's there, and they're actually walking around outside, and you go, the risks involved. Well, look at what's happened in the space station, where astronauts went up for 8 days, are there for 8 months.
I think, Gavin, I think you nailed it over there in terms of to wrap up nicely is keep your mind like an open parachute, right? I mean, look at these 2 things that we have put together, the SMI and the VSA, with your decision-making support, makes your decision-making support really stronger in terms of your position taking, in terms of your trade decisions, right? And then put that into your strategy construction. These are all the things that will be helping you with as we go along, as we become your mentors and meeting you at the Elite Traders Mastermind Annual Summit in Tenerife. I think with that, we'll have a wrap up and a close for today, traders. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master. Take care and bye for now.